Welcome back to the channel, everybody. I am Mick Alfany. So we're going to go over some of these trillions here, get a little update, see if anything has changed. All right. Then I'm going to get to making the members only video. So this article here is from the from LinkedIn. It's titled Cross-Border Payments Guide. What can we expect in 2023? It says, according to Juniper Research, global spending on B2B, just B2B, business to business cross-border payments is expected to surpass $40 trillion. So it hasn't gone down. It's only gone up since we've been keeping up with it. $40 trillion this year, with a significant portion driven by the growing popularity of e-commerce marketplaces, which is only going to double or triple because of Web3. You have all types of new businesses that are going to be formed. You have all types of new value that will be flowing across digital payment systems in e-commerce marketplaces. So like tokenization of real estate, which we'll talk about later in the Algorand chapter. I mean, everything is going to only increase. But $40 trillion B2B, that's part of what excites people, taking a piece of that. I wish we could take the entire thing, but just taking a piece of that, what does that do to the price of something like XRP or XLM or Algorand or Quant if we take a piece of that, right? So now, let's move on here. This here is from FX Intelligence, fxintel.com. And it says together, which they're talking about B2B, B2C, P2P payments, right? These combine to form an overall cross-border payments market of $190 trillion in 2023. So by the end of 2023, we'll see if this number is accurate or not. It says, which is expected to rise 53%. That's a little bit of an increase from what we read last year, right? Expected to rise 53% to $290.2 trillion in 2030. Look how much of an increase that is, right? So if we take just a small piece of that overall total, what does it do to the price of XRP or XLM or Algorand? You see where all this is going? And that's not even half of all of the different things we're trying to do. That's just cross-border payments. You're still the tokenization of everything, the loosening up of all that Nostro, payroll. There's so many things going on with these bank coins, right? But I think XRP has a great chance. XLM also is in the game there. But we'll talk about them a little bit later. But they have a great chance as long as they stay hungry, keep working hard. All the companies, don't forget what you have. Don't forget what's the best of the best payment channels. Right? So now let's go here. I'm going to cover a little bit of XLM related news. I don't want to waste any time here. So this is from wisdomtree.com. It says here, WisdomTree announces second quarter 2023 results. It says record quarter end assets under management of $93.7 billion. Diluted earnings per share of 32 cents, 0.09 as adjusted. So they're moving big money. And if you remember, we covered an article about a month ago where WisdomTree was saying, hey, this is just where we're beginning. We're considering, not a guarantee, we're considering expanding the use of these new technologies. And so hopefully they will do that. But let's read a little tidbit here. It says, WisdomTree Incorporated, a global financial innovator, today reported financial results for the second quarter of 2023, $54.3 million net income, $14.9 million net income as adjusted, $93.7 billion of ending assets under management, AUM, an increase of 3.3%. So this is a company that's just growing. It says from the previous quarter, arising from net inflows and market appreciation, $2.3 billion of net inflows, primarily driven by inflows into our international equity and fixed income products, partly offset by outflows from our commodity products. It says $85.7 million of operating revenues, an increase of 4.5% from the previous quarter, primarily due to higher average assets under management. So everything is looking great here, in my humble opinion. This is a heck of a company to be associated with. Keep in mind, Stellar's associated with WisdomTree, Franklin Templeton, the United Nations, CC Bank. I mean, it just goes on and on and on, right? It's just not spoken of. It's people are keeping it. I don't know what's going on. It's like people keep that stuff quiet. What can you do? I don't know. So this is a great update to have. We'll see what's going to be happening towards the end of the year. If any of this increases, if anything changes. As of right now, everything's looking good in my humble opinion. Now we're going to move on here, right? So we have a little bit of Vechain news. Vechain continues to impress. And they have a tweet here that they retweeted, and it says this. It's from VTags, and it says, when we partnered with Vechain to engineer the VTag, we prioritize both functionality and comfort. Beyond its sleek appearance, this tag serves as a digital proof of ownership by linking your pet to its own unique NFT. It says, plus access puts your pet's medical records with just a single tap using the NFC-enabled VTag, securely powered by the Vechain blockchain. I mean, their technology is second to none. It's just a matter of time, in my humble opinion, before the world really grabs a hold of Veet. And it may stun some people what's going to happen. They have a huge ecosystem. I continue to iterate that. There's some way you can search, probably either on Twitter or on Google, just to take a look at how big their ecosystem is unbelievable. And I don't think they've even gotten to play everywhere yet, because they're heavily associated with certain countries. But I think that's going to play a key role as well in the future. You look at China, which Vechain is heavily associated with. They're becoming increasingly crypto friendly, especially in Hong Kong, right? So Vechain's future is extremely bright. Just my humble opinion. We're going to move on here now to a little bit of Algorand news, right? So this is what I was talking about when I say all of these bank coins they're attempting to access trillions. The future is bright. This is from the Algorand Foundation. It says 60% of the world's wealth, totaling over $200 trillion, is in real estate. And we know real estate has been having some problem. All the various types have been having a bit of a problem. Let's continue on. It says recently, and we have the solution. So recently, MJ Carpentier, CEO of Vesta Equity VPM, joined the LA Realtor podcast to talk about real estate tokenization. So as we know, Algorand has quite a few real estate tokenization offerings built on the chain. So they, I think, stand at the forefront of absorbing that value once it's able to move across the DLTs in the future with a little bit more regulatory clarity. It says here, Michael shares how real estate tokenization will benefit homeowners, investors, real estate agents by removing barriers and enabling the free flow of capital. So once again, that's Vesta Equity, which is built on Algorand. And once again, $200 trillion. So this article here is from Newsweek.com and is titled Mortgage Rates Forecast Housing Market Changes for the Near Future. It says the average 30-year fixed mortgage rate jumped up to its highest level since 2002 last week. Mind-blowing. Climbing about 7% according to the Federal Home Loan Mortgage Corporation, known as Freddie Mac. Newsweek asked two experts what the rise in mortgage rates is due to and what this means for the housing market in the coming future. As of August 17th, the 30-year fixed mortgage was 7.09%, according to the company, up from 6.96% last week. A year earlier, the rate was 5.13%. At the beginning of the redacted, when the housing market was booming, it had dipped below the 3% mark. The vertiginous rise of the most popular home loan in the U.S. in the past year is making the dream of home ownership difficult or even unattainable for many aspiring home buyers. Now, this is what I was saying before of how the economy overall is doing terrible in the U.S. It's mind-blowing to me that the mainstream media continues to prop up this narrative that everything's okay when all of the sectors have been suffering. Bonds, terrible. Housing market, terrible. Commercial real estate, terrible. The banking industry, terrible. So, I mean, before you can improve something, you first have to admit that something is going wrong. But anyway, let's continue to read this here. It says, with experts warning them, they can forget about the favorable low rates they enjoyed at the beginning of the redacted, as they're not coming back anytime soon. You sure about that? Because it looks like they may be taking certain actions again soon, as a certain thing is starting, according to them, is occurring again. We'll see how that works out, right? Says, why are mortgage rates still so high? It says, quote, over the last year, the Federal Reserve has raised its key rate to try to tamper down inflation, unquote. Dr. Jessica Lautz, deputy chief economist and vice president of research at the National Realtor Association, told Newsweek. It says, quote, that has worked successfully, really, but has had a ripple effect on the mortgage market, unquote. While the Fed paused its aggressive hike campaign in June, which caused inflation to go back up, by the way, just like I said it would. I think that was very logical that was going to occur, and it did. I mean, we were basing that off of the historical charts, by the way, which so far have not lied. So now that we have established that the historical charts have not lied, and you see the contraction in M2 money, what do you think is going to happen? When the only time that M2 money has contracted the way that it has is during depressions. All right. So it once again raised its key rate in July, causing dismay among housing market experts. So now let's move on here to another article. So now this article here is from Watcher.guru, and it's titled Brics expansion projected to reduce 90% of US dollar oil sale settlements. I think a lot of people have it confused, and I know a lot of individuals are now, I mean, it wasn't before, but a lot of individuals are now covering Brics information. We've been doing this for a long time, and the crux of what I've been saying is not the dollar's going to disappear. It's just about the dollar being greatly diminished, in my humble opinion. It's not about the Brics using a bank coin directly. No, but it's about the Brics pressing the West and forcing a multipolar world where they have to connect everything with the new financial system, right? That's just completely different ideas, right? And so far, what they've set out to do, they're on the pathway to doing it. It says Brics could shift the global power dynamics in their favor by controlling the majority of the world's oil and gas trade. This important, says the bloc is keen on expansion by allowing Saudi Arabia and the United Arab Emirates into the group. The inclusion of Saudi Arabia and the UAE into Brics could have a paradigm shift in the oil economy, as it could force other countries to drift away from the USD. Therefore, the first step of the de-dollarization process could begin with oil and gas sales. We shall see. We'll see. Right? We'll see what they end up doing. So now, this next piece here is from news.bitcoin.com. It's titled Legendary Investor Jeremy Grantham Predicts Inevitable U.S. Recession. Once again, with M2 money contracting, the only time that's happened is during multiple depressions. So you have to ask yourself, why do they keep floating the idea of a recession? They don't want to look bad. The governments and all of these regulators and whoever they are that are putting out the information that, oh, we're not in a recession. We might be going into a recession, soft landing. They don't want the people blaming them. They don't want to they don't want to have their names besmirched. This section is titled U.S. Bound for Recession. It says esteemed investor Jeremy Grantham, who accurately foresaw the dot-com crash of 2001 and the global financial crisis of 2008, has been forecasting an economic decline in the U.S. since 2021. Reportedly managing about $65 billion in assets, GMO's Grantham shared his thoughts on the U.S. economy during Bloomberg interview on Thursday. Grantham asserts that that America, United States of America, quote, will have a recession running perhaps deep into next year and an accompanying decline in stock prices, unquote. Well, there's a lot of variables to that. I've been telling people this, listen, I don't want to talk about T-bills again. I hope that everybody understands that those effects are always felt later and that liquidity has to come from somewhere. Stocks are included in those risk assets. Says he also maintains that the U.S. Federal Reserve's predictions are inaccurate. Yeah, that's true. Says in a tongue-in-cheek remark, Grantham quipped, quote, the Fed's record on these things is wonderful. It's almost guaranteed to be wrong, unquote. The investment tycoon elaborated, quote, the Fed has never called a recession. particularly not the ones following the great bubbles. All right, so now let's move on here. So now we're going to end off here with a little bit of gold news. It says this is from kitco.com and it's titled Gold Prices Holding Critical Support as U.S. Bond Yields Remain Near 15-Year High. Like I said, there was a lot of bond selling going on. They had to raise that yield up to bring the people back. Here we are. Despite the recent selling pressure, analysts note that the gold market is holding up remarkably well, given that bond yields have risen to a fresh 15-year high. Overnight, the yield on U.S. 10-year bonds pushed to 4.36%, its highest level since 2007. Analysts note that the rise in bond yields is negative for gold as it increases the precious metals opportunity cost as a non-yielding asset. Despite the bond yields, gold prices have managed to hold critical support. December gold futures last traded $1,926.20 an ounce, up 12.12% on the day. Some analysts have said that gold could benefit significantly if those rising bond yields indicate a crisis of confidence in U.S. debt. However, many analysts have noted that the weakness in U.S. bonds appears orderly and a natural reaction as the Federal Reserve is expected to maintain its aggressive interest rate hikes. So, now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.